It's surprising, isn't it? You sometimes hear from younger Malaysians about contributing to EPF, the Employees Provident Fund, and there's this sort of, I don't know, negative feeling,
Yeah, almost like a burden sometimes.
like money just going out locked away forever. But what if that locked away feeling is actually, well, the key to something bigger?
That sentiment is definitely out there, especially, when immediate financial pressures feel so real day to day. But the perspective we're digging into today, it offers a really different angle.
Exactly. We've been looking at this really interesting conversation with Datuk Zeng Huajian. He's the founder of Ajia, and it was featured on the Chara YouTube channel.
Mhm.
And it wasn't just like dry finance talk. It was much richer personal finance, societal contribution, even traditional wisdom, all in that Malaysian context.
And for you listening, especially if you want to get up to speed quickly and really understand things, this is for you. We've pulled out the core ideas from that discussion.
There's moments that really make you think.
Yeah, exactly. We're looking at basics like saving, investing, but honestly, through a lens that gives them surprising depth, real practical wisdom.
Okay, let's jump right in then, that first point. Young Malaysians and EPF. The video kind of hints that maybe a lack of financial literacy plays a part in that reluctance.
Well, it makes sense, doesn't it? If you
Yep.
don't fully see how your money can actually grow, especially in a system like EPF, it's easy just to focus on the deduction from your paycheck right now.
Right, less money today.
Exactly.
But Datuk Zeng offers this powerful counter idea. He talks about the economic of the power of compounding within the EPF system.
Ah, the compounding effect.
Yes, think about it. Small, consistent contributions adding up over like decades. They can genuinely turn into a substantial amount. He really emphasizes that sticking with it, contributing regularly right up to retirement, that's how you see the real growth. Millions, potentially.
Precisely. And just to unpack that, that power of compound interest a bit more.
Mm-hmm.
It's not just earning interest, right? It's earning interest on the interest already earned.
Right, the snowball effect.
Exactly. That snowball gets bigger and bigger over the years with those steady contributions. That's the core of what Datuk Zeng is highlighting.
And it's not just theory for him. He actually mentions that he personally keeps contributing to EPF, even now, in what he calls semi-retirement.
That really says something, doesn't it?
It does. It underlines his conviction.
It shows that core principle of financial planning. Consistently setting aside part of your income for savings and investments.
Yeah.
It doesn't really matter what stage of life you're in. It's about having that plan, like the video says, to reach your goals.
Okay, now here's where it got really interesting for me, moving beyond just personal wealth. Datuk Zeng talks about the societal benefit from everyone contributing to EPF.
Yes, that's a crucial point. It's not just about your retirement pot. The idea is when lots of people contribute consistently, you create this huge pool of capital.
A massive fund.
And that collective strength brings advantages for the whole economy, really.
Yeah, think about it. A larger EPF, managing all that money, has way more bargaining power for big investments, right?
Mm-hmm.
They can probably get better deals, better returns than any of us could individually.
Mm-hmm. Better access.
And then those returns get shared among all the members. It's like this powerful engine fueled by everyone chipping in.
So connecting the dots, individual financial responsibility actually bolsters the nation's economic health. And then Datuk Zeng adds another layer, this idea of maybe using some of his EPF for charity later on.
That really stopped me in my tracks. I mean, most of us just see EPF as our own safety net for old age.
Right. Standard view.
But using its long-term growth, thanks to that compounding, to build up a bigger fund for giving back later, that's a different kind of planning altogether. Are there hurdles to that?
That's a fair question. I mean, there would be practical things to consider, like the rules around EPF withdrawals, how you'd structure that charitable giving effectively. But his point really is about the potential, that our long-term savings can maybe serve a purpose beyond just us.
It kind of echoes those big philanthropists like Buffett or Gates, but maybe through a different route.
In principle, yes. Leveraging wealth for broader impact. And speaking of giving back, the video also mentions Datuk Zeng's own foundation.
Ah, yes, putting his money where his mouth is, so to speak.
Exactly. His foundation channels a good chunk of its profits and investment returns into charitable work, specifically supporting children with special needs, I believe.
So it shows a real consistency there. Personal finance, business, charity, it all links up.
Mm-hmm. A clear through line.
Okay, let's shift gears a bit. The conversation in the video moves on to high-dividend stocks. Malaysian markets specifically. Public Bank, PB Bank comes up as a prime example.
Right. And what's insightful is how Datuk Zeng views companies that consistently pay high dividends. He calls it a form of D, which translates roughly to altruism.
Altruism towards shareholders.
Yeah, like sharing the company's success directly with the people who've invested in it. But, and this is crucial, he immediately follows up by saying, investors must do their homework. That phrase, do your homework.
Okay, so don't just chase the dividend.
Exactly. You need to really dig into the company's cash flow, understand its business model. Can it actually sustain those high payouts long term?
That makes sense. A mature company, maybe less need for huge investments, might find it easier than a growth company that needs to reinvest everything.
Precisely. A company pouring money back into expansion might not be able to be as generous with dividends, and investors need to understand that trade-off. It's about the company's life cycle and strategy.
And they touched on this interesting idea, like a positive feedback loop, where companies known for good dividends attract more investors.
Which could, potentially, support the stock price and overall performance over time. It becomes part of the company's stable reputation.
So like a virtuous cycle.
Potentially, yes. It suggests that being shareholder-friendly with dividends can actually be a strategic advantage in the market.
Okay, so this leads to a natural question for investors, right? Should we just always go for the high dividend payers and maybe be suspicious of companies that seem a bit stingy with payouts?
Well, Datuk Zeng is quite nuanced here. He doesn't really give a simple yes or no. He circles back to the need for individual research, setting your own criteria.
So no magic formula.
No. It's about checking the company's fundamentals, its health, its prospects, and seeing if it aligns with your personal investment goals.
So it's not just the dividend number itself. You need to understand the why behind it. What's management thinking? How does it fit with their plans for reinvestment, for growth?
Exactly that. The context and the strategy behind the dividend policy are just as critical as the payout percentage itself.
All right, let's pivot again. Financial education comes up next, particularly for young Malaysians. There's a concern raised in the video that many young people maybe don't have a solid grasp of basic financial ideas.
Yeah, and that's a significant challenge. Without that grounding, it's easy to make decisions that are maybe short-sighted, not appreciating the long game of saving and investing.
And Datuk Zeng's take here is, it's quite profound, actually. He talks about character first, cultivating good character, and advocating virtues like, well, simplicity.
Mm-hmm. Back to basics.
He uses this great coffee analogy. Instead of spending a lot on that fancy branded coffee, maybe just for the image.
Right, the status symbol cup.
Yeah. Why not grab a cheaper one and then save, or better yet, invest the difference?
It's such a simple but effective illustration, isn't it? That conflict between consumerism, keeping up appearances, and the actual long-term benefit of being a bit more frugal and putting that money to work.
And the video points out how much influence advertising and just general consumer culture have on young people's spending.
It's relentless pressure, really. Always being told you need the next new thing.
So what's the antidote? The video gets into Datuk Zeng's thoughts on environment, family, friends, school, how that shapes our financial values.
Our surroundings definitely mold what we see as normal spending, what we aspire to financially. And Datuk Zeng really pushes for self-reflection, that you asking yourself, is this a need or just a want? Being conscious.
He even talks about how he approaches his grandkids' upbringing, trying to put them in environments where it's not all about comparing possessions.
Building that intrinsic value.
Yeah, rather than value based purely on stuff.
It's a proactive way to instill those healthier financial values early on. And the conversation also tackles that you only live once. YOLO idea.
Ah, yes, the YOLO factor.
It's about finding that balance, right? Enjoying life now, definitely, but also being responsible about the future.
Exactly. It's not about being miserable. The video makes it clear. Frugality isn't about suffering. It's about making smart choices with the resources you have.
Conscious allocation.
Datuk Zeng mentions being happy with simple, cheap meals if they're convenient. It's about value, practicality, not needless luxury.
Yeah, aligning spending with your actual values and long-term goals, not just chasing trends or bowing to pressure.
Okay, now things get really practical. The discussion looks at investment opportunities, specifically during economic downturns, COVID-19 being the obvious recent example.
This is where having that financial discipline really pays off. Understanding market cycles, having cash ready. The video points out how stock prices of solid companies like Maybank, Public Bank,
Big established names.
they dropped significantly during the pandemic panic.
And the key takeaway here is investors who had saved, who understood these weren't collapsing companies, just facing market turbulence.
They could buy shares at really low prices, and they would have benefited hugely from the recovery that followed.
It really highlights the difference between that kind of strategic move and, say, spending that money on a new car that just loses value.
Absolutely. The pandemic was a real-world lesson in how smart investing during downturns can dramatically impact your long-term wealth. It's about seeing opportunity when others see fear.
What I loved was how they connected this to traditional wisdom, this agricultural idea. Sepritmo, spring planting, summer growing, autumn harvest, winter storage.
Ah, that analogy. It's beautiful, isn't it?
It really is, relating ancient farming cycles to modern investing.
It captures that essence perfectly. Save and invest when times are good, the harvest, so you have the resources, the seeds, to plant during the tough times, the winter when opportunities are cheap.
Preparedness, timing.
Exactly. It even mentions the I Ching, the and the importance of acting at the right time, like knowing the right season to plant.
It's amazing how relevant those ancient ideas still feel in today's financial world.
It really drives home that the fundamental principles of sound financial management are pretty timeless. They cut across cultures and eras.
And the whole conversation really kept coming back to humility, both in Datuk Saim's own style and in these traditional teachings, like the Gijie from the I Ching, the hexagram of modesty.
Yes, that theme of humility was very present. The idea that you can never be too modest, always learning. It's a strong undercurrent.
And Datuk Saim definitely seemed to embody that throughout the interview. Very grounded.
Agreed.
So, okay, as we wrap up this deep dive, what are the main things that, stand out for you? For me, it's definitely that power of compounding, easy to underestimate, especially with something like EPF over decades.
That long-term view is critical.
And also realizing our own financial actions collectively impact society. It's not just about me.
Absolutely. And I'd add the importance of aligning financial choices with your values, pushing back against just pure consumerism, and of course, doing your homework, that research aspect for investing.
Yeah, don't just follow the crowd. And that link to traditional wisdom, preparing for economic seasons, that really stuck with me too.
Which really leads to the final thought for you listening. How are you approaching your finances right now? Are you thinking about that long-term impact?
Your own savings, your investments.
Yeah. And could incorporating some of these ideas, the practical strategies, but also maybe that deeper wisdom about cycles and values, could that help shape your financial path moving forward? Definitely something to mull over.